Chronology. The 14th of February 2007. The external auditor Deloitte & Touche did not want to sign the account because he cannot find supporting document for the certain transaction and inaccuracy of the substantially higher revenue for financial year 2006. The 15th of February 2007. The board approves the unaudited results without knowing the issue on account. The 30th of April 2007. The group failed to submit its 2006 annual account to the stock exchange and they applies to Bursa to postpone the release of its audited accounts. The 3rd of May 2007. Bursa Malaysia rejects the applications. The 4th of May 2007. Auditor, Deloitte & Touche highlight the audit issue to the board and executive committee is formed. The 7th of May 2007. The board announces Deloitte's concerns to Bursa. Moores Rowland Risk Management SDN BHD is appointed to undertake special audit would cover issues relating to certain transaction relating to trade receivable and the sale and property plants and equipment. The 30th of May 2007. Moores Rowland interim findings are announced to Bursa. The 12th of June 2007. Chairman Chin Kim Foong and another two committee members Shukri Sheikh Abdul Tawab and Qudin Mod resign, and new members are appointed Sachin Tek, a former auditor Deloitte & Touche as a new audit committee and independent director. The 16th of June 2007. Final report from special audit is announced to Bursa. Impact of the fraud. Individual person. In 2007, Jimmy Chin Kim Foong and Shukri Sheikh Abdul Tawab, audit committee member, were charged 1 year imprisonment and a fine of Rm 300,000. In default 6 months imprisonment. Organizational. The first impact was toward Transmile's profit for the affected years had been reversed to be a loss. The share of Transmile Group were sold by investor. The third impact to the organization was been delisted from Bursa Malaysia market on the 24th of May 2011. The last one is to the shareholders. Transmile's shareholders suffered a lot of their investment from the significant drop in the share price.
Created using Powtoon.
Next is the red flag of the Transmile. The main red flag is when the Transmile company failed to meet the submission deadline for the 2006 annual accounts to the stock exchange in April 2007. Second, the red flag is when the external auditor did not want to sign the accounts as he was unable to obtain the necessary evidence for the transactions related to trade receivables, the sale and purchase of property, plants, and equipment in the company and its subsidiary. Third, earlier in February 2007, the board had approved an unaudited result that had shown an 80% increase in revenue, doubled net profit, and trade receivables that had ballooned to Rm 381 million from Rm 111 million in 2005. Fourth, the audit committee meeting highlighted several issues in the account. However, the issue was not brought up during the board meetings in the following days. Fifth, the auditor found that the revenue was overstated by a total of Rm 622 million for 3 consecutive financial years from 2004 to 2006. Sixth, there was little supporting documents for the cash outflow of Rm 341 million where purported property, plant and equipment. The last red flag is, the company was said to have made payments totaling Rm 189 million without supporting payment vouchers.
Application of the fraud triangle theory in relation to the case. Fraud triangle consists of 3 components, which are pressure, opportunity and rationalization. Pressure in Transmile. First, low in cash. Despite being a strong growth company, Transmile had not really been able to turn its sales into cash. Transmile's trade receivables had been building over the years, with trade receivables for 2006 were reported at Rm 381.2 million. Receivables accounted for much more of the company's revenue growth. Second, no sufficient fund. The cash flows from the operation activities substantially dropped from Rm 161.2 million in 2005 to Rm 18 million in 2006, which resulted in the company not having sufficient fund from its operating activities to service the interest payments Rm 36.5 million. Second component is the opportunity. It is the means by which the individual will defraud the organization. In this stage, the worker sees a clear course of action by which they can abuse their position to solve the perceived unshareable financial problem in a way that, again, perceived by them is unlikely to be discovered. First is about loyal auditor. Deloitte have long percentage relationship with Transmile. The long-standing relationship could, however, to a certain extent pose the familiarity threats. Familiarity could negatively affect auditors' independence of mind and therefore their auditing quality. Second, favorable assessment by analysts that attract more investor. With such favorable assessments by the analysts, the influence on the share price went without saying. Analysts' assessments were not without any disclaimer. The assessments were actually intended for information purposes only and not to be construed as an invitation to buy or sell the shares referred. Rationalization. This is the final stage in the fraud triangle. This is a cognitive stage and requires the fraudster to be able to justify the crime in a way that is acceptable to his or her internal moral compass. 1. Fraudsters think that only light penalties will be imposed. 2 former independent directors who authorized the furnishing of misleading statements involving Rm 622 million for the financial years ended 2004 to 2006 were only sentenced to 1 year imprisonment and fined Rm 300,000 each.
Conviction of the case. First, Transmile was delisted from the Bursa in May 2011. Second, Securities Commission was charged again under Section 122 subsection 1 of Securities Industry Act 1983 in July 2007 for abetting Transmile in making a misleading statement. Gan Boon An is liable to a fine of not less than Rm 1 million to imprisonment for up to 10 years. Third, Shukri and Jimmy Chin also were found guilty under the Securities Industry Act 1983. The Sessions Court had, in 2011, convicted and sentenced as 1 year imprisonment and a fine of Rm 300,000. The High Court had, in 2015, affirmed their conviction and sentence imposed by the Sessions Court.
Created using Powtoon.
Prevention of financial statement fraud in Transmile. Organization. 1. Values of honesty and integrity. It is important to build a strong tone at the top. It could be achieved through the independent selection of company directors. Therefore, the nomination committee plays an important role in ensuring that the company directors are appointed accordingly. Once the tone at the top has been established, the company will be able to culture the values throughout the org. 2. Specific internal control over financial statement. The control design should be considered in each accounting process, and identification of any potential financial statement fraud risk should be made. The company needs to identify the indicator or red flag that might exist in each accounting process. The control should be designed by the Chief Financial Officer and approved by the Audit Committee. 3. Assessment of internal control over financial statement. The company can hire an external auditor to assess the effectiveness of the internal control design for the financial statement process. Although the process might incur additional cost, the company has to measure this against the huge impact of financial statement fraud. 4. Participation of internal auditor in financial statement auditing. The company has to ensure the competency of the internal auditors in accounting and auditing of financial statements. 5. Greater role of Board Audit Committee. The committee acts as the independent body of the company to oversee the integrity of the financial statements and the internal control design. The proactive role, experience and the competency of the audit committee contribute to effective overseeing of the reported financial statement. Authorities. 1. Conduct examinations to identify compliance weaknesses, deficiencies and violations at the firms. Dedicated to the aggressive enforcement of the laws by conduct routine exams, sweep exams, focused on a particular compliance risk issue, and cause exams, often based on complaints or tips about wrongdoing at a particular firm, to prevent and detect fraud and other. 2. Government intervention. Increasing awareness and prevention of fraud. Increasing the structures and staff allocated responsibilities, fraud policy statement, fraud risk assessment, fraud control plan, procedures and guidelines, fraud awareness raising activities, training in ethics or code of conduct, training in privacy principles, employees involved in fraud.
Is there any unsolved issue or questions? No. Based on the Transmile case, there is no issue because it has been solved and the perpetrator already been punished. But there is an issue or questions arise from Transmile case.
Whether Bursa had made the erroneous decision in proceeding to deliberate on breaches of listing requirements against applicants despite ongoing criminal proceedings against them. 1. The applicants present the applications for judicial review of Bursa's decision to impose penalties against them. 2. The ground of challenge by the applicants was grounded on the simultaneous criminal action by the SC and the proceedings by Bursa for breaches of the listing requirement.
3. The applicants contended that Bursa had erred in law and acted in excess of its jurisdiction in the AC's decision when it proceeded to deliberate on the breaches against them despite the ongoing criminal proceedings against them. 4. This was because the action by Bursa was said to pose a real risk of bias against the applicant.
5. The applicants further submitted that they had relied on the advice and management of financial advisors in respect of the financial affairs of the company. 6. The applicants also argued that after arriving at an erroneous decision, Bursa imposed penalties which were arbitrary, unjust and
It is possible the applicants was grounded on the simultaneous criminal action by the different statutory bodies at the same time?
It seemed like Gov did not take the previous fraud case as a lesson. Transmile is like mini Enron case. If there is so many fraud case in Malaysia, it will give bad impact to Malaysia where outside investor will think twice to invest in Malaysia or how to save the existing investor to the company.
Created using Powtoon.